Good day to everyone. This is Dr. Sivaraman of iknowindices.com. Good day to one and all. Glad to meet you here again for a new month. It is Asian Session Live Market Analysis on February 1st, 2010 between 5 and 5:30 GMT. So it is a simple market tracking technique using the live market code page. I'll give the link for the same. You can open it in a browser. I will fix the camera over that of the live market code page. You can see where exactly the market is. Now currently, Euro is trading around 1.38793881. The low is 1.3852, which was shown during start of the Japanese session, and the high is 1.3886, and the net change is 16 pips positive. And in the case of GBP, it is trading below that of 1.60 and just 50 pips drop from there. 1.5938 is the low, 1.5980 is the high, net change is 28 pips negative. So on Friday, there was a panic created after the GDP data, and everybody thought that only US is going to grow, all other countries are not going to grow or show GDP, and become panic and liquidated the long positions, and subsequently find market is staying near that of the same low. And this is how they create the market sentiment and subsequently act against the traders. And you know that new events will take the market in a new direction. In the case of USD yen, 90.18 is the current level, 90.22, 90.19 and 90.22. The low is 89.80 that was shown during the start of the Japanese session. 90.36 is the high. Net change is 8 pips negative. So GBP 8 pips negative and USDN 8 pips negative shows that it is a contrarian move. Thereby they are able to bring in a dip of 35 pips in the case of GBP yen. So this is how they just create that sentiment for the week beginning as a false move. And in the case of CHF, 1.0603 is the high, current level, 1.0598 is the low, 1.0962 is the high. The net change is 2 pips negative. So when Euro is making about 18 pips positive, CHF is making only 2 pips negative. That means they don't want to dip USD CHF much, and as a result, you find that USD CHF, which was trading around 1.4650 on Friday, which has gained, and now the net change is 15 pips positive. Similarly, in the case of Euro GBP, 28 pips positive. So now you can understand for the week beginning, they are handling the crosses, which is also confirmed by the negative net change in the case of USD CAD and negative net change in the case of AUD. So they are making contrarian move. They are making USD losing move in the case of USD CAD and USD gaining move in the case of AUD USD. So this is how when they show this net change as negative in both commodity pairs, you can understand they are trying to handle the crosses to start with. Then subsequently they will come to the majors for the new month. So what they have done last month, and last month when Euro was trading around 1.4142, everybody was asking when it come to 1.40 at least. And then I said that there is a great potential that there will be a drop GBP to 1.60 area and Euro to 1.40 area. And then subsequently they made an extended downward stop. And here in the case of Euro and GBP, the much weighted extended downward stop, and they made it only on the last day of the month, and when these levels are shown, we hesitate to buy. So when we are willing to buy during the drop, when it was around 1.42 or when Euro was around 1.42 and GBP was around 1.62, even people were asking, I don't think that GBP can come down, so let me buy it around 1.61, and the downward move is very limited. So that is how they had taken the buy position in a hurry, and subsequently they showed 50 pips, 100 pips lower so that they can create the panicness for such trades. And when they liquidate the long, and immediately they will rise the market. So this is how they make the extended move. The level of extended move depends upon the pending positions of the traders. And the players also do not really determine, okay, let us take Euro to 1.38 area or GBP to 1.59 area. They don't have any predetermined plan. And as they move the market down, they find traders are buying. So when the traders are buying, then they will try to lower it down so that they will liquidate. Once the traders start selling, they will absorb all those selling and trap them. During that process, they rise the market and induce them to do the short covering. So this you need to understand. So that is how they create the market sentiment and act against the traders. So during this particular process, what is visible in the market is not true. It may appear that Euro and GBP are very weak, but they are the buyers. And you will be wondering, how come they are the buyers? Imagine that everybody has got a tendency to sell now. There should be some buyer at the lowest level, and otherwise the transaction cannot take place. And they do the circular trades and drop the market of this kind. And in that process, we also try to sell to them, and they are happily buying it from us and try to raise. And in case if you buy it, then what are the precautions you have to do? So anybody, when a material is available cheap, they will try to buy it. When it becomes expensive, they will try to offload or book profit. But on the other hand, in the forex market or in the stock market, the fear is really the factor. Because of the leverage trading, we find the usable margin erodes and we straight away book loss as if we have done a great job. Later on, we repent. So instead of that, what is the best solution for such a situation? So we can use the hedging to limit the risk. Once it is hedged, we just watch how exactly the hedging is behaving. In case we find the market has come, say for example, Euro has dropped to 1.36 or GBP has dropped to 1.57, then there is no fear at all. If you would have used a stop, what would have happened? The position would have been closed with another stop. So you have determined your risk of 30 pips or 40 pips and you have lost the particular money, and that is predetermined by you that you are willing to take the risk. The same way, when the market has dropped seriously down, still you can close the hedging position with that of the original position with a predetermined loss. So there is no question of additional loss, and there is a provision available in the trading platform wherever the hedging facility is available that you can close the original position with the hedging itself. And that way you can just watch the market for some more time. Only if you have the position, then you will be able to take position. If you are not holding position, you have to take a fresh decision of entering into the market. So that is the greatest advantage of hedging, that you get the cooling time to determine where exactly the market is going. The second important factor with regard to using hedging is when the market has moved against you or in favor, then you are given the time to handle the hedging. So when the market goes against you, when the hedging is making profit, simply you can keep stop at the entry or keep a mental stop to start with. And in case if the mental stop is making loss for 30 minutes to 2 hours, you can just cut the hedging with a nominal loss and keep another hedging order to limit the risk. And when the market moves up, you can always try to keep stop at entry in the buy position and try to make use of it, or try to maximize the profit in the buy position. So the market has got only the possibility of either going down or coming up. So these are all the only two types of basic moves in the market. So in that process, if it has come down and every day it comes down, it can come to zero. Probably in stock market, you come across the penny stocks. So some stocks which are dealing in several dollars, and they would have come to penny stocks because of the performance is bad or the company is liquidated, etc. Whereas in the case of currency, they are the representative currencies of the various countries. The countries are not going to just like that leave it. So you cannot apply the same strategy what you have been applying it in stock market to that of the forex market. Similarly to that of the commodity market. Because commodity, you come across the essentials and non-essentials, but they are valuable. So like gold, silver, etc., they are all valuable commodities. So valuable commodities cannot become zero. And similarly, the essential commodities cannot become zero. So obviously that is being used on a day-to-day basis. So there you again will not see a situation wherein the bankruptcy happen. So in the case of currency market and forex, in the case of currency and commodity market, you do not come across a situation like bankruptcy. Whereas in the case of stock market, it can happen. So with the same type of fear, you cannot trade it in commodity or in the forex market. In the forex market, you come across the change, what is happening is the fourth decimal, whereas in the case of the stock market, it is the second decimal change. So you have to understand that there is a vast difference between the forex market with that of the stock market. So same algorithm or same type of strategy, if you try to use it, then you think that every day 100 pips drop is the potency. But they cannot make endless drop of that nature. In the case of the stock market, they can drop the stock specifically in order to accumulate the stock at a lower level. And that is a private company stock. So when a private company stock, even though it is a public limited company, and they are held by close net of people, so they can just drop the market and buy and similarly raise the market and sell. It need not move in tandem with the market. The company news can trigger the individual stock in a varied condition. Whereas in the case of the forex market, you find the sentiments are created mainly with regard to US economic conditions and secondarily with regard to the economic conditions of Europe and UK. Then subsequently with regard to the other country economic conditions, you find certain amount of variations with regard to the regional currencies and also the local currency, which we call it as an exotic currency. But they are all with a limitation. They cannot make an unlimited drop or unlimited rise. This you have to keep it in mind. Only then you will be able to get rid of the market fear. So when we are watching euro around 1.40 or 1.41, we are willing to buy when it drops to 1.39 or 1.38. Once it is being held at 1.38, we hesitate to buy. So this the players know very well. That is why they hold the market in such a low level for a prolonged period. And they know pretty well that traders are still holding the long position, and they are probably in the futures and options or the derivative market, they would have just carry forward the positions to that of the new month, and they will see that new month is also not giving any profit. Immediately they will just liquidate the positions in a hurry. Later on, probably they will think that it may go down further and only US can come out of the recession, rest of the countries cannot. So this sort of presumption invariably creates a fear, and that becomes a magnified fear. And once the fear gets magnified, nobody else can help such traders in the market. And when the fear grips, then they always do foolish things. And you know that any decision what we take under the grip of emotions are all wrong decisions. It has been proved beyond doubt. Any decisions which are taken on emotion, they are all wrong. Later on, the people who have taken such decisions repent drastically. So the same is applicable in that of the market. So here, when it comes to that of the lower level, probably there might be a drop of 50 pips or 100 pips. And keeping that in mind, you have to use a strategy, a trading strategy to limit the risk and maximize the profit. Why you have to limit the risk? Because our usable margin is lesser when compared to the other players. That is why we need to limit the risk. And if our usable margin is plenty, then there is no question of fear involved in that. And we know that small traders don't have such equity. So obviously they have to plan beforehand before entering into the market. After taking the position, by expressing the anger in front of the computer or expressing the anger in front of any person or analyst or a website or whatever it is or a blog, that doesn't help them in trading. This is very, very essential one need to understand. And if at all anybody can help in a situation in this world can only be yourself. In a distress condition, the crisis management is very, very crucial. And in order to avoid such crisis management, avoid the formation of the crisis itself to start with. So during the month end and during the month beginning, new month beginning, there will be always trend reversals. And during such trend reversals, they can make a quick move in the market. In fact, on Friday, the net change was hardly about 100 pips, but since the move was very slow, it has created and they have shown the new psychological level which has triggered the fear like anything for many of the players. And the players know very well how cautiously they have to move the market and grab the money when the traders are in distress. So this we have to keep it in mind and we have to improve our emotional status. Only then we can become successful traders. And it is not the technical analysis alone going to help you. And suppose somebody says that, okay, this is the lower level, why not you buy? And there is no guarantee. No analyst will be able to give a guarantee that market will not go about 10 pips, 15 pips lower than that level. Even the pivot point calculation, support and resistance, anything for that matter, you try to take into consideration. And the market has got a potency to breach such levels. It doesn't mean that once they have breached, they are going to move it in the other way. And they try to do it in such a way to hit the stops. So this you need to keep it in mind because every month beginning and the earlier month end and the new month beginning, I am forced to tell this particular concept. And in spite of that, the new traders find it extremely difficult to adapt to that of the trading environment. So I'm trying to spend a little more time in order to motivate them. So let us come to that of today's focus and how exactly the market is going to be in this particular week, also in this particular month. So during the Japanese session, you will come across swing near the low. So you find that without breaching the high, they are making swings. And if you see the spread in the case of euro between high and low is hardly about 30 pips. In the case of GBP is about 50 pips and in the case of yen is just about 30, 40 pips. So you find that they are making a narrow range swings near the low in order to create the continuity and they do not want to drop more. And if they want to drop more, they can make very volatile moves during the start of the day or they can just make a havoc of making about 100, 150 pips drop and subsequently make the rise. They are not willing to do that because they would have noticed that about 50% of the traders are holding sell positions and the other 50% of the traders are holding buy positions. Who are holding buy positions? Higher level buy positions are pending in the market and the lower level sell positions which are just making break even or just a nominal profit. They are all being held in the market as sell positions. So those who have taken, say for example, once the low has been cut and the psychological support level has been broken or any technical support level is broken and the market has come down, then they will go in for a breakout trade and take sell positions there and wait to book profit or maximize the profit. So you find that the players are able to recognize that there are higher level long holders and lower level sellers in the market. So how exactly they have to move? If you happen to be a player, how exactly you will be making the move in the market? And obviously you will try to earn from both the players, both the traders. So that is the best way of making good money because they are all pending positions and definite money is there if they try to make such moves instead of inducing the traders to enter into the position and subsequently make loss. So that might be a more stressful strategy rather than handling those who are holding pending positions. And obviously a position which is taken in the market has to be closed with a position. They know very well about it. And they hold, say for example, about 100 positions and they distribute to that of the traders about 30 positions. They know that 70 positions they are holding, 30 positions the traders are holding. So obviously then they can easily understand how much of higher level longs and how much of lower level shorts are pending in the market. And they have got other means of knowing it. And once they are able to identify that the traders become panic and standing on the tender hook, and they make one quick up move and a down move, and they will earn from the other traders very easily. So this is a day in and day out process for them, but still we are looking at the levels and say, okay, Euro has dropped about 600 pips, 900 pips, or JBV has dropped about 700 pips, 800 pips. We only grumble from that of the high. We relate the current market level and try to grumble. And subsequently, when Euro and GBP go up, then we will again continue to grumble. Oh, it was around 1.38. I failed to buy it and I was having the fear. And subsequently, it has come to 1.44. And similarly, GBP has come to about 1.69. And see, I could have easily earned about 1000 pips if I would have taken a buy position. I was holding a buy position and somebody misguided me, and because of that, I liquidated it. And this is the normal talk you come across in the market, and that is of no use. You have to grab the profit. There comes your strategy, there comes your skill set, and there comes your mental controlled mental condition, and also the self-confidence. So if you have the self-confidence, you can earn from that of the market. If you don't have the self-confidence, you depend upon others' confidence, then obviously you will be shaky. And if the other person who is confident enough, and if he loses the confidence, obviously you are bound to lose the confidence. It is like a battalion who is trying to fight against that of the enemy. And if the leader becomes frightful, obviously the rest of the soldiers will also become frightful. That is why the leadership quality is the one wherein the leader is supposed to motivate the soldiers to go forward and fight and win the enemy. So that is very important. In your mind, you need to keep this particular attitude that you try to become the leader for your trading rather than depending upon somebody else as a leader. So with regard to the moves during the European session, they will make brief lower level consolidation. There might be a downward stop and during that particular process, and they are expected to make a quick firming up move. Then they will come to the middle level, probably hold near the high which is set for today, and then swing and firm up. And when I say firm up, and if that firm up does not happen, and if you shout at me, it is not going to hurt me. Let me tell you, these are all the expectations. So I am trying to use various type of analysis and trying to give the forecast. And if the firm up does not happen, there could be so many other factors associated, so that my forecast and also the trading strategy will be beneficial to you. Otherwise, you tend to blame me, and I am willing to accept the blame. But that is not going to solve your trading problem. Then contrarian moves are expected for the new month beginning, and Euro rise in GBP slide are expected. Similarly, Euro rise and USD CHF rise are also expected today, and also USD Yen is expected to gain along with that of GBP, and you will come across overall the USD weakening as well as USD strengthening moves in the numerator as well as the denominator currency. Then let us analyze the initial lows at the high. So they set the low in the case of Euro 1.3852, 1.3886 the high, and the market is trading in between. So for nearly about 5.5 hours, they have been making swings here, and the traders are hesitating to buy here or hesitating to sell. That is the situation you come across. Only those who are holding pending positions, they become nervous. Otherwise, people are cautious and they are waiting for some data trigger and some confirmation in order to make entry into the market. And in the case of GBP, they formed the initial low as 1.5939 and subsequently they formed a low 1.5938 by cutting the low by 1/5. Currently trading around 1.5944. So you can understand that as a brief downward stop. The high is intact 1.5980. And in the case of USD CHF, the low is 1.0598, the high is 1.0622, they are intact. And Japanese yen 89.80 and 90.36, they are intact. Then Australian dollar 0.8782 the low, initial low 0.8871 the high. The low has been breached in the case of low is also intact. Australian dollar. So the spread is somewhat better when compared to the rest of the currencies, and you find still Canadian dollar has now gained net change 2 pips positive, and Australian dollar is showing still the net change negative, and so this indicates that they wanted to make a small dip in the currencies which they are firmed up. Probably they will dip euro and rise GBP. That sort of contrarian moves they are expected to make. And USD CAD 1.0669 is the low, which is intact, and the high is 1.0716, which is also intact, and currently it is above that of the psychological level 1.07. So the net change is 1 pip positive. So they could make a swing near that of the high in the case of Canadian dollar, and Australian dollar they may make a swing near that of the low, and subsequently they will make the gain moves. And I was explaining last month that many people were asking when Australian dollar was around 0.93, why it is not rising that much along with the euro and GBP, it is falling. Now you can understand I have given the range that it can trade around 0.88 to that of 0.93, and it has come to the level of 0.88. They are all great buy opportunities for position traders. So let me just minimize the PowerPoint presentation and take up the questions which are asked here. I fix the camera over that of the live market code page. Question. Let me go to the beginning in the outcome window. Okay, Emira has got a question. Do you think euro and GBP can recover above 1.40, 1.60 figure, or more fall is required before that price? So it is the new month beginning, and new month beginning you come across the important data release on Thursday and Friday, and before that I am expecting them to make a rise, and Thursday itself they are expected to make a very significant rise, and Friday they will make further rise using those data release, and they can simply create the opposite of what the market sentiment currently holding. So till such time there will be volatile moves, and they may sporadically cut the low and the high, and that's part of the game. So about 20 pips drop or 50 pips drop or even 100 pips drop for that matter in the case of GBP, they are all part of the daily affairs of the players. We need to understand that, and they have got a great potential of rising or dropping about 150 pips in the net change. So that you have to keep it in mind, and depending upon the stops and depending upon the limits, they will try to move the market to handle the traders holding the pending positions, and also subsequently induce the traders to take wrong directional positions and then subsequently trap. So you know that players alternatively trap the bullish as well as the bearish traders. Don't think that the players are bearish or bullish, and they alternatively trap both the bullish as well as the bearish traders. Next time, it is not 100% so, of course, you see a stop and manage your risk. Yes. See, no forecast can be 100%. Let me tell you, if anybody is capable of giving 100%, and that too using statistical calculations, then obviously you will come across an element of error involved in that because they are all estimates. Actually, it can vary. So error estimates vary. Sometimes the error might be large and sometimes the error might be lower. I am trying to lower my error or the deviations from that of the expected forecast by fine tuning my algorithm from time to time. So still I am not in a position to give you 100% forecast. What will happen if I give an 100% forecast? Suppose if I say that, okay, Euro 1.3870 is a good buy level, all will keep a buy order, but who is going to sell? So God has created the world in such a way that uncertainty is part of the game. Not only with regard to trading, any event in our life, uncertainty is part of the game. So that you have to keep it in mind. Accordingly, you have to minimize the risk and maximize the profit. And instead, if you expect a perfect forecast and if the forecast goes wrong, you get annoyed. That means your understanding is very less. It is childish. That means you are not able to envisage the amount of risk involved with your trading. And sometimes the traders get the panicness because of over trading. And that is the most important thing. Many traders think they would have lost a lot of money when they come across a new type of forecast, which is really giving them the chance to earn money. Immediately they become greedy. And instead of taking one lot at a time, they started taking 10 lots at a time and try to see that, okay, instead of making 50 pips, let me make 500 pips with 10 lots. Then they lose it. So either out of greed or out of panicness, the traders continue to lose money in the market. That you have to keep it in mind. So you should not develop the greed or you should not develop the panicness. And that can be prevented only by using trading strategy. So a trading strategy is a one which is pre-planned. So as you are planned beforehand, similar to when euro was around 1.4142, you are willing to buy it at 1.38 or 39. Probably you, based on your assessment and based on your analysis. And when it comes to that particular level, if you hesitate, that means you don't have a plan. 30. If euro going to go up or down in this week, how high? See, when you ask me how high, the potency can be in this particular week 350 pips. That is what the weekly limitations I have given it already. And according to my estimate, euro is expected to go up in this week. And if it goes wrong, then don't blame me. This is only an estimate. Please explain what we can do if the platform does offer hedging. If the hedging facility is available, you kindly read or listen to that of the Tracking the Forex Market Together webinar. I have given it in the month of November. Otherwise, on 19th of January, I'll be giving another Tracking the Forex Market Together webinar. You attend there. I will explain how exactly the hedging can be used at varied conditions. Similar to that of the stop, we can use it. And if it is hedged, we can just watch the market, and if the market is nowhere near your buy or the sell, you simply close it with a position similar to your stop. And if the hedging is making profit, then you start using the trading strategy. So hedging doesn't mean that you do not know how to trade. Hedging is to limit the risk, and when the opportunity is given, you try to convert it to a trade and try to earn money on either way moves of the market. And you know very well, euro cannot continuously drop endlessly or cannot rise continuously. Only thing is the interest portion is involved in that. If you have got equity to hold the position, then obviously you will be able to book profit on your sell, book profit on your buy. And you know everybody talks about market cycle. That means it rises and goes up, then subsequently come down and just go lower. So this is market cycle. So this market cycle happens on a daily basis, weekly basis, monthly basis, yearly basis. So if you take the positions within 2-3 days, definitely if you hold it with a limit, and if your equity is very good, definitely you will see that your limit is being filled in the market. and you try it in a demo trading platform, and don't be very greedy of keeping about 350 pips or 200 pips limit. You just keep about 50, 60 pips limit. Definitely you see that your trade is closed with profit always. There are various trading strategies depending upon the equity, depending upon the time available and the nature of trading platform, whether it is offering hedging, whether it is offering trailing stock, whether they are not giving report, and whether they are not giving slippage. Depending upon those conditions, you have to develop your trading strategies and the trading ideas. Simply, I say something and you cannot simply follow it. You have to modify according to the conditions what you come across in your trading practice. Yeah, of course. I was answering to Smith's question. So whether USD yen will rise along with Euro and GBP, that is what expected. And you see that USD yen drop has been limited to 89 area, and I was estimating that it will come up to that level of 90.50. Around that, it is making moves now, and it is expected to gain levels. And once it crosses 93, you will come across significant rise happening in USD yen. Then, how low can GBP go? This is the question. Everybody is asking how low, how high, and things like that. When I statistically estimate and give the level like a pivot point or a support and resistance is reached, if it is being breached, and immediately people are getting annoyed with me. Rather, it is nothing but they are getting annoyed with it of the market, and they don't have anybody to yell at, so they find that I have become the scapegoat. So obviously, I do not want to give the levels as many of the people have suggested, and probably they may make a stop and downward stop and below that of the low. Okay. Saraswata says we want a better picture. See, is my picture important or my content is important? See, only the child requires a picture for the recognition and to get affiliated or get affections, etc. But adults require more of an information. See, the man behind is not very important. The concepts are important. If it is beneficial, and even if there is no picture, say for example, these sort of display of pictures came into the website only about 3-4 years back, and before that there was no picture at all. And it doesn't mean that only with a picture or with a better picture, because see, if I am an ugly looking man, then what is that picture is going to help? So it's not very important. That's what I feel. How do players know? And that also, if I give a recent pictures and things like that, that may give a threat for me. How do players know where the stops are? Okay. See, it is very simple. I explained it that I got 100 positions and I distributed 30 positions to the traders in the market. And I know where the 30 players or how to, what level they will be able to hold it. And I explained it in my earlier webinar that if you watch carefully in the live market quote page, just about 2 minutes back, they showed a level 1.3893 in the bid when the ask was 1.3877. So they placed such an order, and that is a specific order which will not execute trade. The order will expose the limits as well as the stops on the higher side. So with the help of such orders, they will be able to expose the pending orders in the market and easily find where the stops are, where the limits are, and things like that. And not the last stop. Until the last stop is placed, they will not make the move. They want to move the market to the area close by, wherein the cluster of stops are there. That is why, if you continue to watch the live market quote page, you will be able to develop a great insight. And that too, in the live market code page alone, which is coming from the interbank treasury, such order placement can be witnessed, but not in other places, not in your platform. They are all filtered out. Will euro yen drop further before the rise? And it appears to me that it was their final downward stop in the case of yen cross. How low can euro USD go before there's what? They have formed the low 1.3852. Probably they may make a brief downward stop, and in the event they find cluster of stops there. If there are limit orders kept there, they will not fill that. GBP is holding near low. What do you forecast GBP for this week? See, GBP is showing a net change of 23 pips negative and Euro is showing a net change of 16 pips positive. You can understand it is a contrarian move. In order to rise Euro GBP, and also similarly you find the net change in the case of Euro is 16 pips positive, net change in the case of CHF is 0.0000. So that means they wanted to rise the European crosses. In the sequential trend reversals, I explained to you that finally they handle the European crosses and then subsequently they make the moves. After the trend reversal, they will be making the trending moves in the market. And in a day or two, you will come across what is the direction of the trending move. Then you will not be asking these questions. And during the trend reversal, this sort of questions are bound to happen. And in order to avoid becoming panic, use the hedging order to limit the risk and try to develop a mindset of accepting a small loss if the hedging is making loss and try to cut it. Significant rise is expected tomorrow in which major? See, there are only four majors and you will come across the rise in the case of Euro and GBP. There will be variations with regard to the quantum of rise in Euro and GBP as a continuation of contrarian move, but both are expected to make the gain. Why are you expecting significant rise from tomorrow? Okay, my algorithm says significant rise, that's all. I don't have any other reason for it. Don't you expect lower level consolidation, downward stopper? They have done enough of lower level consolidation and downward stopper. And if you feel that they will continue to do the downward stopper, then they will be giving profit booking opportunity to the short sellers. So when they rise, the short sellers will not come for short selling. Then there is no market. Okay. The players get such info from connections with brokers. Brokers provide no specific values but a band of stocks players. If you think that way, it's fine, but you see that players are much more powerful, the brokers are hardly anything for them. There's something wrong with the camera here. I think there are so many questions, probably I'll wind up. So probably I'll answer all those questions in the blog because I already breached about 15 minutes. Okay, cam is visible. Because here the hotcom window is fluctuating, I don't know why, and the camera displays a different picture for me. Okay, so let me try to focus the camera over that of the PowerPoint presentation. Give the focus for you. Japanese session swing near low and European session lower level swing and firm up, and US session middle level swing and firm up. These are all the expected moves, and we are bound to see contrarian moves in the market and significant rises expected from tomorrow. And for interest rate decisions of ECB and BOE and also for non-farm payrolls, the market is expected to make upward spikes. So I take this opportunity to thank everybody who have come here to listen to my week beginning webinar on Asian Session Live Market Analysis. I will continue to present the webinar again tomorrow. Thank you all. See you again tomorrow.